Welcome. My name is Thomas. I'm here to share in this video the claim federal tax credits and deductions. And we deal with four sections: individuals. Right under that is corona credits, deduction, and relief. Right across from it, business and self-employed. Right under that, corona credits, deduction, and relief again. So from the individual standpoint, the standard deduction plays a role in helping you get a higher refund because the standard deduction has been raised due to the 2018 tax reform bill that was implemented through Trump when he was in play. Right under that is the earned income tax credit that's been around for years, which um, is in play to help increase your refund, which mainly applies to low income families who work and make under $50,000 based on filing status and dependent situation. So the chart covers one kid, two kids, and three kids, and the filing status and the income amounts will determine how much of the earned income tax credit you qualify for. The child tax credit and the dependent credit deals with children that's 17 and under for the child tax credit and 17 and over for the dependent credit. 2,000 deductions for child tax, 500 for other dependents. Child independent care, another slang term for that is babysitting credit. So for people who go to work, who have little children, who may not be old enough to go to school, but you got to have them in a daycare center somewhere while you can work and provide for the family, you get 50% of that as a refundable credit this year, which is a big deal because child care can be expensive for working class families. Right under that is the individual retirement agreement IRA. So if you made a contribution to your 401k plan, W-2 box 12, you'll see a letter. Next to it, you'll see a number which shows how much you contributed to your 401k plan during a year of your W-2. Education credit, 8863, or lifetime credit based on which one you qualify for based on your overall situation. So if you got college age children that you're paying to go to college because they didn't qualify for grants or scholarships because your income level was deemed to be too high, then you get to use the education credit because that credit was intended for parents who were paying for college age kids who didn't qualify for scholarships or grants, and you had to pay out your pocket for their education. Well, that credit was intended for you, or if you was going to school yourself and you didn't receive any scholarships or grants, whatever you paid, you could write up to so much of that off and get a credit based on that. And so that's how the individual section works, which helps your overall refund, if any, based on your overall situation. Under that is the Corona credit deduction and relief. So the recovery rebate credit came out a couple of years ago for people who didn't get a stimulus for whatever reason, and there was the opportunity to claim the fact that they didn't get a stimulus, and you would answer the question that you didn't get it, and you'll put zero on the box, and they would calculate a credit that you should have gotten that was part of your refund. But the problem was that we found out after the fact was they had to manually go verify that, which took longer for you to get your total refund. And so that's the downside to that recovery rebate credit that they had to manually check that. Uh, Earned income tax credit, again, is still dealing with people who qualify for earned income tax credit. Mainly low income families generate the biggest credit because it's based on total income and filing status. So if you had three kids and you made $15,000, you got the biggest portion of the earned income tax credit based on that example right there. And then charitable contribution deduction. So if you make charitable contributions, the only way that comes into play though, if you made enough of a charitable contribution that will supersede your standard deduction amount. So Schedule A deals with charitable contributions. It deals with mortgage interest, real estate. It deals with medical expenses, gambling losses. So those are the different things Schedule A covers. So those are considered personal itemized deductions. And so charitable contributions alone wouldn't be sufficient enough to even play a role in your tax return when it came to Schedule A, because the standard deduction amount has been risen so high that the average person doesn't have enough personal deductions to even write off on the Schedule A anymore. That's going to really benefit going forward with the due tax reform changes that was implemented in 2018. And then we got the relief for withdrawals and loans from retirement plans and individual retirement arrangements. So we had people who drew money out of their retirement plans, and they was able to pay off that amount over the course of 3 years, and so that helped them not have to pay it all back at one time. So that's what that's about. Over on the business and self-employed side, we got the opportunity zone, which is dealing with being in a certain area and being able to use credits and deductions that benefit your business. Standard mileage rate is the mileage that you use for business that you're able to deduct as a tax write-off inside your business. But the problem with uh, mileage is you have to have meticulous records when it comes to write your mileage and claiming a standard mileage rate deduction, because the IRS is serious about you actually being able to have records showing the mileage you took strictly for business. They ask you questions like, did you have another car for personal use? Do you have this information written down? So they ask you particular questions to see how well you're going to qualify for this particular deduction. Research credit, you get to do research when it comes to your business that you can particularly maybe write off uh, on a tax return that may or may not make a difference. Uh, I'm not sure because we don't know the overall situation to that. And then tax information for retirement plans, which covers more information on if you have a retirement plan, if you made a contribution to it, how you can possibly put that on your tax return, which doesn't really give you that much of a deduction, but something is better than nothing. Then right under that, you got the sick and family leave credit. So for people who had family members who were sick due to COVID, say for example, mother and father both worked, they had a couple of kids that was in school, and one of the parents got sick due to COVID, and the other parent had to stay home to help the other parent due to that illness to take care of the kids, make sure they got to school and everything else. Then you were able to utilize that sick and family leave credit. Employee retention credit is a credit that's dealing with people who had employees and was able to get a credit for that. Pay leave credit for vaccines. So you got a paid leave credit if you had taken the vaccine or was willing to take the vaccine. Deadlines extended for sponsors of employee retirement plans, uh, increased limit for charitable contributions, relief for qualified opportunity fund investors. So these are possible different scenarios that you may have qualified for based on your overall situation that may have helped you not owe any money at all or increase your refund amount for the 2021 tax year that we deal in 2022. So what I do is I help self-employed small business owners maximize their profits through tax deductions. Meaning, if you haven't made any real money inside your business, you're limited on the amount of tax deductions you can write off because your tax deductions amounts are direct and proportionate to the income you produce. So if you only made $10,000, the IRS don't want to see $30,000 of tax write-offs because it doesn't make any sense that you would generate only 10,000 but had over 30,000 in expenses inside your business, and if so, they want to see it, which is going to trigger a red flag and an audit on you, and they want to make sure that you can produce those third-party receipts to pass an audit. And so, when it's all said and done, if you still haven't filed a tax return for whatever reason, and you need someone to accurately and professionally prepare your return for you, based on your individual situation. I prepare taxes all the way up to October 15th because after that point, the season shuts down so everyone can get ready for the upcoming next season. And so if you need my services, reach out to me with my contact information, which I implied that you can call me. That's why I put it inside the description of all my videos. So you can reach out. I have a link that takes you to a booking page where I have a discovery call for people who have an idea, want to start a business, not sure what direction to go in whatsoever, and need some guidance on making that happen. I charge $99 to help you bring that to life. The next one is my consulting services 167, which I would help you do the same thing in this discovery call. Plus, I would help you bring that to life more hands-on. The first option is discovery call, where we're gonna simply get together through Zoom. I'm gonna learn more about you, your business, and all the things you've done, if any, at that point, and give you the next steps on what you need to be doing going forward, and you'll go out and make it happen. Consulting services will take that to another level, where I'll walk you through everything you need to be put into action, and actually help you make that happen for a limited time for that 167. Then I have a 30-minute coaching call for women who are looking to start their own tax preparation business from A to Z, help remove all the guesswork, give you targeted coaching and leadership for your tax preparation business, help you fast track your success with that by leveraging my 21 years of experience, 15 as a business owner in this career industry of tax preparation and taxation. So if you need to know more, you need my services, click on my booking link, click the appropriate one for you, and I'll see you in my next video.